Hi there, everybody. Wanted to get out a long overdue market update to you. So, first thing on the screen is probably one of our least favorite words, and that is recession. And we're talking about that because this year there's been a lot of debate on whether or not the US is or isn't in a recession. So, for Lance and I, we were always taught that the definition of a recession is 2 consecutive quarters of negative GDP. Well, we've had that this year, okay? And now all of a sudden, there's high-ranking officials, leading economists who are all of a sudden trying to redefine what a recession is or means. We're not going to get into any of that. Lance and I are of the opinion that we're in a recession. How severe or mild that recession is remains to be seen. But remember, one thing that's very important is the U.S. economy and the U.S. stock market are two very different things, okay? The U.S. stock market has a very good habit of making its low point or bottoming out 3 to 6 months before the recession ends, okay? That's because the stock market is a leading indicator, where the data that a recession is based on is data that's looking in the rearview mirror, okay? So the markets tend to bottom out before we get the worst of the economic or recession news, all right? So let's talk about that a little bit further. Something happened the other day on Friday that's starting to point more and more in the direction that maybe the market lows are in and the recession could be nearing its end, okay? So switching gears here on the screen, it says S&P 500 completes 50% retracement. The heck does that mean, okay? Let's talk about that. So on January 1st of this year, of 2022, the S&P 500 started the year at 4796, all right? And in June, it's actually been steadily declining from its high point down to its June low, which has so far been the low of the year. And that low point is 3,666. All right. That low has been about 24% decline since the beginning of the year. But what's important here is the midway point, the halfway point, or the 50% retracement point. That's 4231. All right. And we just hit that number on Friday. So, great, all these numbers. Why is that significant? All right. So, going back to 1946, which is the post-World War II era, there have been 13 bear markets. And remember, bear market is a 20% or more decline in the stock market. So, there's been 13 of them. We are now in the 14th bear market since 1946. All right. Every single one of those, when the S&P 500 hit a low spot and bounced back to the midpoint from the high and the low, or the 50% retracement number, every single time it hit that midway point, the low was in, the markets did not go on to make new lows, and a new bull market or rally had begun, okay? So, we're going to look at that again. Every single bear market since 1946, when the S&P 500 went on to hit that midpoint or the 50% retracement mark between the high and the low, a new bull market had begun within the next few days or weeks, signifying that the market low was in, we did not make new lows, and we went off to new highs every single time. All right? Does that happen again? Obviously, only time will tell, but I think history is on our side on this. If history is any indication, I think we have a lot to look forward to with this. And with all the crazy news that's out there, it's really important to find the bright spots, and I think that this is a pretty bright spot. So just wanted to give you guys some insight on some of the data that Lance and I are looking into. I hope you found this informational. Thank you so much for tuning in, and we will see you soon.